Neil Hennessy of the Hennessy Focus 30 Fund. Is the market cheap or expensive or fairly valued here?
In my opinion, I think it's cheap over the long term. I mean, you can look at it, Greg, either from a price to sales standpoint, a price to book, a PE, or a price to cash flow. And the one I like to look at is price to cash flow. The average company is selling at 7 times price to cash flow. And if you just look back at history, just 5 or 10 years ago, and to get back to an average on price to cash flow over 5 or 10 years, you're talking about the Dow Jones moving somewhere on the upside between 4,000 and 6,000 points. And I mean, you just look at how cash flush these companies are. The only thing holding back the market now is really optimism on both the consumer and business side.
Well, is the consumer hanging in there? What's your view of the consumer staples and the consumer discretionary sectors?
We've liked the consumer staples and discretionary for the last 3.5 years. The consumer's holding in there. They've switched their buying pattern though, Greg, and they want more for less, and it's more on the lower end. So when you look in, say, the consumer staple area, you're looking at a Dr. Pepper, or you're looking at Domino's Pizza. If you just want to shake up what you're doing on a daily routine, you can get a pizza delivered for $10 from Domino's. If you go to consumer discretionary, you can look at a Ross Store or Family Dollar. They're at a lower end, but people still need the necessities. They're going to want to eat, and they're going to want to be clothed.
They also want a whole lot of iPads and iPhones. They're buying a whole lot of Apple products. Do you think that the Facebook IPO is going to add a little pep to the technology sector?
I'm not exactly sure, simply because it starts to resonate back to 2000. From the numbers, I haven't seen the S1, but from the numbers that I hear, you're going to be paying about $25 for a $1 in revenue in Facebook. And those are the numbers that we saw at the end of the tech boom of the 1990s.
But one of the best performers last year in terms of sectors was utilities. Do you think that this space can keep it up in 2012?
I think so, because it is back to the necessity story. And you look at utilities, they have a predictable and reoccurring revenue stream, unlike Washington. And they pay dividends, which is, normally it's going to be in the 4 to 5% range. And Greg, I got to be honest, I have never seen a utility have a 20% off sale. So, you're just going forward into the utilities until we get clarity out of Washington on the 3 major issues: taxes, health care, and what are the rules and regulations going to be.